What is up, you guys? Nick here, and in today's video we are going to be covering the intense landscape and investor volatility surrounding NIO, and in result where you can expect their share price to go. Why is this volatility occurring? Where are analysts expecting NIO's share price to move in the coming weeks? A follow-up on fraud allegations concerning other Chinese electric vehicle competitors, the United States House of Representatives filings against Chinese equities on American exchanges, and finally, whether you should currently buy, sell, or hold NIO shares. But first, Weeble is doing a promotion which they have just made even sweeter. Now, when you 1. Sign up, 2. Open an account, and 3. Deposit at least $100, you receive 4 free stocks valued at $3,700. $3,700 for free when you sign up using the link in my description. This is an absolute no-brainer. The promo ends soon, so do not sleep on it. Hit the subscribe button if you haven't already. I do a ton of videos like this. I first told my subscribers to purchase NIO at $7. You don't want to miss any of my future picks. I focus on innovative disruptor companies. Decimate the like button for the YouTube algorithm. Without further ado, let's get right into it. Alright, so moving into the recent volatility in share price that was seen in the last 5 days. The 5-day moving average is currently off the charts as investors are selling off their shares for a multitude of reasons and then picking up shares again. Rival Chinese EV company Kandi, trading under ticker symbol KNDI, was reported for fraud by prominent short seller Hindenburg Research. Fearing this predicted sell-off, investors ran for the doors as the perfect storm for a sell-off was brewing. I just want to note that I really do think the timing of this fraud allegation is quite suspicious. Hindenburg stands to gain from a falling share price, and timing this announcement to an industry rival after a massive cross-board surge of virtually every EV player could almost guarantee a frenzy of selling investors. And well, that's exactly what happened. Not only was this timed to a predictable incoming correction and profit taking, but this also coincided to the day before the United States House of Representatives were scheduled to vote on the Holding Foreign Companies Accountability Act. This was to put in motion the potential delisting of hundreds of Chinese companies from domestic exchanges, of which I will get to the details shortly. Investors were so happy with their profits in NIO the past few months that they parked their gains in more established American industry rivals like Tesla, which saw massive jumps in share price over the same period. Now, investing is a game of cat and mouse, and although during a massive sell-off your emotions and reflexes may be nearly forcing you to follow the pack and sell, in actuality, very often doing the exact opposite can actually grant you additional percentage gains. I've studied and followed NIO for a long time now, and I really do believe in their fundamentals. They have very digestible and thorough SEC filings, they have multinational offices, and I trust their management and future direction. It's because of this that I actually bought additional shares on both Tuesday and Wednesday after a dramatic decrease in share price. Remember, we're investing for the long term, not the short-term movements. This volatility day to day just becomes noise when you zoom out on a long-term scale of 3 to 5 years minimum. Now, looking towards the House of Representatives bill that could impact the future of Chinese securities being traded on American exchanges. Now, many investors and analysts actually got the details and the potential ramifications of this quite wrong, propelled by short sellers trying to scare investors of Chinese companies away. So I want to carefully analyze the bill and what effects it may have on investors of foreign securities. So especially with a transition towards a Democratic Biden government, an abolishment of all foreign securities traded from China on US exchanges is extremely unlikely, and I mean extremely. However, with the incidence rate of Chinese companies committing acts of fraud to incentivize primarily European and American investor capital, the American government is cracking down on which Chinese companies can trade on American exchanges. They are also promoting more regulations that they need to adhere to continue trading. The bill in question, fronted by Republican Senator John Kennedy and Democratic Senator Chris Von Allen, will be voted on this evening, December the 2nd, and has been receiving bipartisan backing. It is expected to pass. Now, what this legislation will do is not delist every single Chinese company from US exchanges. However, instead will only prevent certain Chinese companies from being listed if they have not complied with the US Public Accounting Oversight Board's specific audits for 3 consecutive years running. Now, that was a bit of a tongue twister and is actually quite specific legislation. So this won't affect a large cohort of companies from an entire country. Chinese companies, of which of course NIO is, would have 3 years to comply with the bill, in which case if they didn't, they would then be delisted. Now, if you have put NIO under the microscope and combed through their filings, you would already know that they are very transparent and are making efforts to establish foreign trust. They need this to be able to break the stereotype of fraudulent reporting from Chinese startups. I really do think that they are a very trustworthy company in comparison to other notable Chinese companies. They are likely aware that the faintest hint of fraud would shutter them long term. I do not think that investors of NIO need fret over the trustworthiness of NIO and their ability to comply with the US Public Accounting Oversight Board. They are rapidly becoming an established company with growing strong roots in Europe and North America and are achieving a level of acclaim and credibility within the automotive industry. There are certain investors who actually would never allot capital to Chinese-based startups, and I think this is actually a bit of a mistake. I for one am confident in this company, however it is always important to note that there is a slight risk. Alright, so I don't know if any of you were watching NIO's share price on opening bell and immediately started sweating and contemplating all of your life choices and portfolio equities allocations, but I for one definitely was. However, I reminded myself why I invested in this company in the first place, where the share price could reach in the short and long term, and how I believe in their fundamentals and their direction. And you know what? I actually picked up more shares. And by golly, did that ever work out nicely. If you bought shares on the bottom V today, you could have potentially been up over 20%. This is showing just how insanely volatile this stock is, and how it's actually gaining more volatility now than it ever had as a penny stock in its early days. So one thing is for sure, and that's if you can't stomach day-to-day heavy movements, you'd be best to put your money in and not pay too close attention. The last thing you would want to do is follow your emotions and sell out from fear and then miss a potential surge. I really do think moving further into the week and into December, analysts and investors will begin to realize their November delivery record release. I do not think that this is realized in their current price, as a broad EV sell-off and a Chinese equities sell-off is dominating the landscape and winning the tug of war, so to speak. Analysts' ratings usually begin popping off a few days after delivery releases, and historically speaking, have been extremely bullish. This typically causes substantial share price gains. I would not be surprised in the least to see a heavy surge after this broad sell-off that's been occurring. Remember that NIO's share price has not been falling due to anything systematic or internal regarding the company itself, but instead due to exterior factors. Profit taking after huge EV surge, movements to more established EV companies, anxiety regarding Chinese securities, and prominent short seller attacks concerning competitors. Are any of these actually NIO's own doing? No. And that's why this has been a fantastic buying opportunity. Their eyes are still set forward, and with so much upside surmounting in the next few months, I really do think this may be a bottoming out or close to it. And heck, if it's not, you know what? I'll just be buying more shares. Because you know what? Long term. What up, long term gang? NIO's regulatory credits are poised to come into play in the next quarter. They are planning on rolling out up to 7,500 vehicles in early 2021. Their supply strain is under less stress. Batteries as service has now rolled out, and the lead up to NIO Day is poised to be huge. I will be keeping you all informed on all NIO moves moving forward, so make sure you hit that subscribe. You don't want to miss any updates. Anyways guys, thanks so much for watching. Thanks for the continued support. Let me know in the comments how you feel, and don't forget about the Weeble promotion. It ends soon. You receive 4 free stocks valued at $3,700 for free when you deposit only $100 or more into an account. Use the link in my description. You don't want to sleep on this. Anyways guys, I'll see you in the next video. Smash the like button if you haven't. Cheers.